AbbVie shocked investors in June when it announced its bid to take over Allergan for $63 billion. Shares dropped as much as 16% and crashed through the $70 price per share threshold and the 6% dividend barrier following concerns over AbbVie's giant debt load and the quality of the assets it acquired. So, should investors buy AbbVie? And what does a rose have to do with a growth stock? Well, the request for this video was made by Snowfire, and this is a Snowfire rose. So how about we take a look at AbbVie? AbbVie is currently trading at favorable ratios in comparison to its industry. Currently, the stock is trading with a PE ratio of 7.85. In comparison, its industry reflects an average PE ratio of 14.42, nearly double. AbbVie has a PEG ratio of 1.41. The PEG ratio is similar to the PE ratio, but also takes into account the company's expected earnings growth rate. AbbVie's industry has a slightly higher PEG ratio of about 1.77. AbbVie has a price to sales or price to revenue ratio of 3.13. This is slightly lower than the industry average of 4.07. For your information, sometimes the price per sales ratio is a preferred metric because revenue can't really be manipulated, so sales are often a better performance indicator. Lastly, AbbVie has a price to cash flow ratio of 14.71. The price per cash flow takes into account a company's operating cash flow and can be used to find stocks that are undervalued based on their cash outlook. AbbVie's current price to cash flow looks slightly more attractive compared to the industry average of 15.23. And these figures are just a handful of metrics that show AbbVie is likely being undervalued right now. However, let's take an even deeper look. Growth investors focus on stocks that are seeing above average financial growth, but finding a growth stock that can live up to its true potential can be difficult. In addition to being potentially more volatile, these stocks also carry above average risk. As a result, one could end up losing if growth is actually over or nearing its end. In that regard, the historical earnings per share growth rate for AbbVie is 21.3%. The company's current earnings per share is expected to grow 11.5% this year, crushing the industry average, which calls for earnings per share growth of 1.3%. Cash flow is a lifeblood of any business. Right now, year-over-year cash flow growth for AbbVie is 33.6%, which is higher than many of its peers. In fact, the industry average is much lower at about 12.7%. The company's annualized cash flow growth rate has been 18.7% over the past 3 to 5 years versus the industry average of only 5%. So, let's take a look at our charts. And we're looking at the monthly chart on AbbVie Inc., and the symbol is ABBV. For disclosure purposes, I do not hold any shares of AbbVie at this time. And this is a monthly chart going back to, say, early 2014. If we go to the far bottom left of the chart, we can see the price there all the way through the current time frame has a general upward trend, and that's not too bad. We've had a roller coaster ride in between, but the fact that this bottom here is still elevated above previous lows is a favorable sign. Looking at the MAC, we had the top there in early 2018, but both the fast line and the slow line are heading on down with a bit of acceleration here. And they're going through, at least the fast line, through the zero line. So this is not quite ready to bottom or base yet. And that's also shown here in the histogram with this bar, red bar there, exceeding all others. Things are still accelerating a little bit on the downside. But a little bit of change here, at least with the price rate of change. The bottom in the fast line is at that point. It moved up, tried to cross through the slow line, got reflected back to here to this point. So that's the first sign that it's attempting to bottom. But I think that bottoming period is going to take probably at least several months to a few quarters or so. Relative strength is at 30.58, continuing to weaken. We're getting pretty far down here, so I'm not sure how low it's going to go, but doesn't show any signs of slowing down yet. However, the stochastics does show that it wants to slow down with that move down here. Again, the fast line moved up toward the slow line, wanted to go through, got reflected back. And you see that reflection that the fast line is now going relatively close to the slow line in somewhat parallel movements. That is a sign of a bottoming process, at least the initial signs. So again, though, it's going to probably take a few quarters before it does bottom. We'll know by the stochastics. Looking at volume, volume looks fine. And then the Williams also with the very bottom there in, say, late 2018. This is an early signal with regard to the bottoming phase. It does want to try to bottom here, but now the Williams is going to bottom before the price does. So watch that as well. Moving back up here, you can see that the price chart it had the lower low here with this bar, and we're a little bit higher here, but I'm not going to call that a bottoming process yet. I want to see some of those oscillators perform a little bit better before I would be enticed in buying into AbbVie. So given what we see with the charts, and given that earnings are coming later this month, my suggestion is waiting to see the performance of AbbVie and conducting due diligence on the fundamentals before committing any money. So we have time to wait on AbbVie. And for today, that's ChewDog Charts. Thank you.